in California, if you want to have some kind of limitation on liability, it's pretty simple. There is something called a registered limited liability partnership in California. You don't want one. Very complicated, only works in certain industries, and it turns out when you go to your CPA to get your taxes done, it's going to cost you a fortune. Very complicated record keeping and tax reporting requirements. And so what that brings us to is either the limited liability company or one of the flavors of corporations. Limited liability company is new in California. The United States has only had limited liability companies since 1978. And Wyoming, of all places, was the first to authorize them. They've been in Europe for 100 years. They've been in Central and South America for 100 years. What are they? For lack of a better word, it's a partnership, but with the limited liability shield of a corporation. Very simple to operate, virtually no corporate formalities. It's a nice choice. The corporation, the standard corporation is what people call the C corporation. It's just a corporation. That's all it really is. What you hear called as a S corporation is just a corporation. It's no different. You simply go to the Internal Revenue Service and you ask to be taxed under subchapter S of the Internal Revenue Code. It's not a big deal. And essentially what happens is the corporation is taxed somewhat similar to a partnership. I wouldn't sweat the load on tax right now, but if you're generating losses, an S corporation allows you to use the loss on your personal income tax. A corporation, the losses stay with the corporation. If that sounds like, oh my God, it's just too well, don't worry about it. It's not something that is going to make the difference between what entity you choose. When you form an LLC, you have to elect one of three types of taxation. You're taxed as a corporation, or you're taxed as a partnership, or you're taxed as what's called a disregarded entity. And when you're going through the formation paperwork, somebody will just say, well, how do you want to be taxed? That's a big question. And it's a question you need to think about really with an accountant, not with an attorney, before you make the election. What we do here is we have a sit down with the entrepreneur, the attorney, and either your accountant or my accountant. And one of the things we grind through is, how many employees do you have or do you think you're going to have this year? What kind of sales do you think you're going to have this year? What's your personal tax situation? All of these kind of have to be taken into consideration. And then I'm not the one who's going to make the decision. The accountant is the one who's going to tell me, oh, hey, Roy, when you set this thing up, go ahead and select partnership, or go ahead and select disregarded entity, or go ahead and select corporate taxation. Those are big questions, and whatever you pick, you've just launched yourself down at least a year of operating in that mode, and at the end of which hopefully your tax advisor is going to look at your taxes, hopefully know what he or she's doing, and say, oh, you picked the right thing, or oh my God, you need to convert to this other.